Welcome to Bears in Exile. Today is Friday, July 20th, and this is the weekend market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, and all the rest that we normally take a look at. So, today was Options X. Very strange day, normally. And we had some fears come out of Euroland with the Spanish bond climbing. Not a good thing. Anyways, even though we've had positive results overnight, and we did start up in the overnight session, it fell apart, and this is what we got. Big red candle. 120 points to the downside. Yesterday we had the positive new recent high, and that just didn't matter today. This has had quite a move, and it was time to give back a little bit. So what's interesting is that today we got a downtick, and the downtick did not resolve itself intraday. We are still, let's see here, I want it to be as close as we can get it. Say 2785. That looks about right. Yes, it does. So 12785. About 50 points to the downside from where we are. Not a whole lot. Notice it coincides with the upper price consensus level pretty darn close. So might as well assume that the two are related. And beyond that, once we have that downtick resolve itself, we'll have our bubble corrective move, and we can see if it wants to continue to the upside. But we've been saying for a while, for a week or more, we've been waiting for the secondaries to catch up to the 14-day RSI moving average to join it for the rollover. And it would appear that we're finally there. Got our downtick on the 14-day RSI moving average. The stochastics are trying to roll over. The CCI is rolling over. The RSI is rolling over. MACD histogram has stopped pointing up, going sideways. I'm sorry, not the MACD histogram, the MACD itself. And the MACD histogram has ticked down. So very, very nice. We did have the green in the heat map, so we knew we were in a warning phase. And away we go. Very nice. Looks very positive, going from massively positive last night with the unknown being when it would roll over and how long it would be locked in the upright position. And looks like we have our answer. Now beyond that, 60-minute time frame. Really good move to the downside today. Did it do too much? You can see here the majority of today's loss was in the gap down, and it made a rather slow trek down all day, just melting away. And the unknown being, we didn't know if we would get a miracle rally at the end of the day, which has been the normal mode of operation the last couple of weeks, and it did try. It didn't succeed, but it certainly tried. Beyond that, we can see that the stochastics have gone all the way to the bottom and are turning up, along with the CCI, along with the histogram. The MACD is still pointing down. The RSI is trying to limp back up, but the 14-day RSI moving average is still in the down position, all kinds of room to move. If we need a secondary reset, that would be completely appropriate, since it'll be moving in the opposite direction as the 14-day RSI moving average. It will most likely be muted. I would doubt that it can recover the halfway point of this large bar. If it can get to that point, I think that's where it will crap out. But if it's able to get there, well, if it's able to exceed it, that will tell me that, hey, now is probably not the time. But if it gets up to that point, fails before then, it's going to look really bearish. So it's going to be an interesting Monday. And beyond that, you know what, I'll take a look at the volume. I've talked about this one a little bit in the past. And we can see that, the two major ones for the turn are the accumulation distribution, and that is not pointing down yet. The other most important one is the unbalanced volume, and look at that, went negative today. So we have 1 out of 2, and out of the 5 we have 2 out of 5. So not a majority yet. But once the accumulation distribution crosses over, points down, oh man, this sucker is in for a lot of pain. So I'm going to be on the lookout for that. Moving on to SPX, a little bit worse than the Dow. Just like the Dow, we have a downtick today. It was not resolved intraday. It gives us a really firm target at about 1357, mid 113.57. Very nice move today. Beyond that, everything is the same as the Dow. No need to rehash. Moving on to the VIX. Looks like people just could not believe the move, ending with a spinning top. But we did get an uptick. Came close to resolving itself intraday, but fell just a little bit short. And it is just above the 17 area. Looks like about 1710. So it came very, very close, but not quite enough. And beyond that, we have a really good alignment for a move up in the VIX. MACD going sideways, MACD histogram up, RSI up, 14-day RSI moving average up on the stochastics, up on the CCI. We've talked about this bottoming warning area in the heat map. So excellent, excellent, excellent. We do have that new low right here that probably will be retested at some point in the unknown future. But so we have kind of a interesting situation where the bottom should be retested, and a bubble corrective move also needs to happen. Very curious. And in the 60-minute time frame, we can see that the secondaries want to reset themselves. Maybe that would be enough to do it, but we're not going to know until next week. So reset, and then we'll see. Wrong one. TNA. This one had a great move down. You can see it went to the long-term moving average bar, backed away slightly, fat body spinning top, and everything is set for decline. Everything ticking down. So very, very nice. And it has gone a little bit much in the 60-minute time frame. A little bit of a bounce would not be uncalled for. Just like the Dow, just like SPX. And UUP, the dollar. Yeah, we had those Spanish bonds run into trouble. Everyone started running back to the dollar, gapping above the upper price consensus level. And we talked about being more likely that this gap needed to be filled, and then it would be free to do its thing. We're a little bit concerned about this gap right here. Doesn't seem to be a problem at the moment. And we figured out about this gap after the bubble corrective move. So things are running the way that they should be running at this time, and I'm pretty happy that it did go up rather than want to fill this gap at this moment. It will be filled at some point, just doesn't seem like right now. Beyond that, trying to get a bullish cross again on the MACD. MACD histogram ticking up. RSI up, CCI up. Not all of the stochastics up yet. 14-day RSI moving average up. We've been watching that through even this decline. That's why the 14-day RSI moving average is a primary indicator rather than a secondary, because it normally wins in the end. Actually, it always wins in the end, but very nice. And FXE, the euro, very nice, making a new multi-year low, extremely bearish. We knew that when it made this new recent low that it should be retested, and so it has gone on and exceeded that, so very nice. Only bad thing about this is the bubble corrective move has failed. It was just too great a move to the upside that was required, and we thought that would happen over the last video or the last two videos, because we were running out of time and it was stalling. So we pointed that out. Everything moving down. Very nice. So is this the low of the euro? It sure doesn't look like it. Nope. 14-day RSI moving average. And these things don't look like they need a reset yet. The weekend can bring anything, but yeah, that looks pretty darn bad. Comp Q, the NASDAQ. Yeah. Got our downtick today. We talked about this being a possible island reversal, and sure enough, downtick has not been met. It is at 29.20 on the dot, not far away, 5 points. So we do need to see what these downticks, after they resolve, what they want to do with themselves. That applies for the Dow, the SPX, CompQ, everything. So not going to proclaim victory for the bears yet. That is going to be a major test when that bubble corrective move is done. But beyond that, it does look rather bearish. Everything ticking down with the exception of the slow stochastic. Pretty nasty. And since this one has done so much better the last week than everything else, it would only be right to look at the 60-minute, see if it's overheated like the Dow, like SPX. A bigger move to the upside means a bigger move to the downside. And we can see that the short-term moving averages are just barreling through the long-term moving average bar, unlike the other charts. We can see that it looks pretty extended on some of the secondaries. The 14-day RSI moving average has the entire length to move to the downside in the 60-minute time frame, which is also different. And the stochastic's holding low. MACD histogram still ticking down. MACD, plenty of room to move to the downside. Down on the RSI, down on the CCI. If these are stuck in the lower position, and the 14-day runs all the way to the bottom for them being stuck, very nasty. I'm losing that connection to my data feed for some reason. And Apple. Yeah, Apple got hit today. Going to see what those earnings bring next week. Apple did have a downtick today. Downtick was, within pennies of being met. Fell just shy. And to me, that's a good thing. A good thing for Apple, having it not need that much further to the downside to go. freeing it to complete its bubble corrective move and then see what it wants to do. With earnings coming, why wouldn't there be a pop? We can see, unlike everything else, the 14-day RSI moving average is still moving up. Yeah, the CCI is down, the stochastics is down, RSI is down, histogram down, MACD down, but that 14-day, it is different. Doesn't mean that this isn't the point where it starts to roll over, but having a difference is a positive thing at this moment. And GE, trying to get a better read on the Dow. They had very positively embraced earnings, at least in the media. That is a crazy, it's not even, I mean, it's a doji. It's like the craziest spinning top doji ever, closing right below the major price consensus level. But look at those tails, incredible. New recent high by a huge margin, and a testing the low area from both of these candles. Amazing. 14-day RSI moving average moving down. Stochastics are mixed. CCI up. RSI down. MACD sideways. MACD histogram up. Boy, that's a this one is a mystery. I can't say one way or the other. And going on, JP Morgan, the most important bank. If I can find it, there it is. We've talked about the problems with the long-term moving average bar, now closing below the major price consensus level, gapping down, and nothing good. Everything ticking down, with the exception of the regular RSI, and the MACD is looking for a bearish cross. Not complete yet. Ugly chart. Ugly. If it breaks this previous low, right here, we have a little bit of a gap fill at the previous month's lower price consensus level and the previous major low. Ugly. Oof. Okay, well, you got to see a little bit of my background for a moment. And going on to XLF, financials as a whole. Also ugly. Closing below the upper price consensus level, closing below the long-term moving average bar, which is actually now a flat line. Notice how there was no long-term moving average bar. Actually, it was bearish, but had it been bullish, there was a flat line, went right through it like butter. Bearish, everything ticking down, looking for a bearish cross on the MACD. Whew. And we're moving on to GLD. Still nothing to really go off of. Nope, nothing to go off of. Not even getting to the long-term moving average bar yet. And the secondaries are a jumble. Just a mess. Nothing to do with this. SLV probably more of the same. And secondaries are a jumble. And still far away from the long-term moving average bar. Nothing to get out of that. I still don't have XOY for some reason. I need to contact my data provider, but until that's fixed, USO. I think we talked about it being outside the upper Bollinger Band last night. I'm a little bit iffy on that. But like it should when it does that, should go sideways or down. It did both, ending with a spinning top. No downtick yet. Got a blip in the heat map, not major. and everything really darn high and trying to roll over. Stochastics trying to roll over, CCI rolling over, RSI rolling over, histogram rolling over, the 14-day RSI moving average, and the MACD still pointing up. Very, very questionable, very, very extended. I think this one will be coming back shortly. And especially in the face of a slowing global economy. The only thing that can save this is war news out of the Middle East, which is possible. And Walmart, little monster in my pocket. Actually, it's not in my pocket anymore. I got rid of it. But I will be looking to short it again. After completing its downtick move yesterday, it tried to race back up. It did exceed the halfway mark by a little bit. That's a good sign. And we can see that it is so mixed in the secondaries. 14-day RSI moving average slight tick up on the CCI, down on the stochastics, down on the RSI, down on the histogram, and down on the MACD. More bearish than bullish. I think that this one will crap out before it reaches its previous high. I'm not sure where in here it'll crap out, but when it does, I think that it will fall back down to earth still. And I'm glad that I didn't have it today, just in case. So, there it is. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Have a great weekend.